back to BLOCKTV, and it's time now for Crypto Globe, where we take a trip around the world to hear about the latest developments in the industry. Now, to guide us on the tour is Ethan Pierse, director of the Paris-based CryptoAsset Institute. Ethan, thanks for joining us today. Always a pleasure. Well, let's start off real quick with it. What should crypto assets businesses expect in 2020 due to the new 5 ALMD?
Yeah, so there's lots of stuff. Go through a couple lists of just things to check off in your mind, but basically this anti-money laundering and counter-terrorist financing directive, there's been several. This is the 5th one. More or less, it's taking what was established under the 4th AMLD and enforcing it or expanding it into places like crypto. So it entered into force in July 2018. But member states of the EU were required to implement these rules no later than January 10th. So this should be in place now across all of the EU. In simple terms, basically, anybody who they're looking to reduce the anonymity that comes with using really any kind of financial instrument that is out there to help criminal organizations or terrorist organizations finance themselves. And obviously, crypto is now the subject that everybody wants to get into. So, and that's definitely the highlight. We'll see there's a few other things they've rolled into 5 AMLD as well beyond crypto. So a couple different things, kind of creating this legal definition for them that just says that crypto is any kind of digital representation of value. So any kind of a token or coin or whatever words you want to use that allows value to be digitally transferred or traded or exchanged. Then taking that a little bit further, applying all the rules that there's this thing called obliged entities, which are basically any kind of financial institution that these rules apply to, and adding cryptocurrencies and exchanges and custodians to that list of these obliged entities. And by doing so, it requires any kind of a crypto company to perform customer due diligence, which we already kind of expected, but also submit suspicious activity reports, SARs. So this is just putting the ball basically in the crypto companies' courts to monitor transactions, not only in terms of knowing who is using their platform or application or their specific crypto, but also if they notice things that seem out of order, that they are actually proactively reporting those.
Mm-hmm. I mean,
and then it also means that,
if I could jump in real quick, and while everyone agrees this is great news to kind of slow the roll of terrorists and criminal organizations, I mean, this has to be devastating to hear if you're just a crypto lover who likes, the privacy that comes along with cryptocurrencies, and you don't want to really do anything nefarious with it.
Yeah, so I think the issue here is that if you want to hold lots of things, lots of value, then you maybe can get away with doing that in some private way, depending on how you want to do it. But as soon as you want to take that value out and spend it, we're going to see that's where this gets a lot more complicated. So, in that sense, to your point exactly directly, this removes all of that, because there are 4 or 5 really main points that they highlight on their fact sheet for 5 AMLD. And the first one is increasing transparency about who really owns companies. And while that may not directly apply to crypto, the point being is they're wanting to reduce this idea of having holding companies or other structures that allow kind of this nested or opaque structure of who is really behind a specific entity. And then if you take that a bit further, they want to help financial intelligence units, so these watchdog units in each country, to have more and better tools to monitor things. They want to have a centralized bank account register, not only in each country, but specifically then across the EU. And this will mean that all of these different accounts, they will have one or several, but still connected databases that allow them to know who is behind every single bank account. This allows them to tackle terrorist financing by basically removing anything anonymous from that. specifically things around prepaid. So we hear about, credit cards, not credit cards, but bank cards, payment cards, being created in order for people to push their crypto out and spend it. Well, that's going to have some severe limits. There were already limits under 4 AMLD, and now the limits have been increased. And so if it is a in-store purchase using a prepaid card, whether that's, you put money on it using fiat or crypto, it doesn't matter, then you're limited to 150 euros in terms of a transaction. And if it's online, it's only 50 euros. And so that's going to, being able to pull that money out and spend it as cash from your crypto is going to be limited through any prepaid options. And then obviously, anything that you're doing with your exchange where you're pulling money into a bank account, the exchange is going to potentially have reporting issues there. And then your bank is going to also potentially have to report those transactions. If nothing else, your identity through your banks can be very clear. This is going to apply to virtual currencies, but also to things like tax and audit services and to traders of works of art. So basically trying to get in there to every space that they have identified under 4 AMLD that people were cheating with and kind of clean that up. And the last piece of this that's really, being broadened is the criteria for assessing risk countries. They call them third countries. And that's been harmonized. So basically there's no more loopholes across the EU. And if you're from, if a client that's using your application, your exchange, whatever, is from one of these countries, then you have to perform enhanced due diligence to mitigate any kind of risk that happens to be there. 5 AMLD broadens these criteria. So the list that we currently have is probably going to get bigger, but it's places like Afghanistan and Iraq and Iran and Pakistan. You can find that list on the website of 5 AMLD. In short, if you're a crypto assets compliance officer for a company, you need to think proactively about any kind of risks related to financial crimes, people using your system for money laundering or terrorist financing, and that these things will continue to be expanded probably either through your region, like your own country, or even more across the EU. So you should probably proactively be thinking ahead about where all this could go.
Mm-hmm. But I mean, this is much stricter and much wider ranging regulations. What is all this compliance going to do to these companies' bottom line? They're going to have to hire more personnel. Is this going to really affect on the business end, these crypto companies?
Yeah, well, I think you've got compliance things that you need to be thinking about. So obviously you're going to have to hire financial professionals that understand these rules well, or you're going to have to hire a company and integrate their solution into what you do in order to make sure that you are compliant. You're going to have to look at all of your processes and make sure that they follow the rules and that you are correctly following KYC protocols, and then all these other rules about these third countries, about how you're pulling, limiting the amount of money that can be pulled out if you're using any kind of prepaid options that are a part of your solution. Anything like that, I think that's going to be an issue that you want to be looking at. You're going to, obviously that's going to increase costs, but it's also going to reduce the anonymity. So we saw a couple startups in November and December in the EU that actually shut down. Some people have reported that's because of 5 AMLD in the sense of that they were forced to. If you look at those cases, the ones that we've seen so far, it was actually more of a choice in the sense that they did not want to voluntarily reduce the privacy or anonymity of their solutions. And so they chose to shut down. It's kind of the same thing, but the point being that people who have solutions in the crypto space, that the entire identity of that is the fact that they provide anonymous solutions and that they create a sense of privacy, most likely are going to be much less so through this. So that potentially could affect their entire business model or reason to be. And that means either they will not be able to scale in terms of clients and providing the value they said, or it means that they may voluntarily shut down because they can't do what they wanted to do.
Mm-hmm. Well, shifting gears to a company that's slightly out of this realm, Alibaba and their Ant Financial, which is in charge of Alipay. That's the most highly valued fintech in the world. They're set to launch their Ant blockchain open alliance this month. What does that mean?
Yeah, so people don't probably outside of China probably haven't heard of Ant that much. They may have heard of Alipay, but yeah, this is the largest fintech in the world in the sense of specifically around Alipay. But Ant as the kind of parent company of that, and then above Ant is Alibaba. Ant itself raised $14 billion. Last May at $150 billion valuation. Will potentially be going to an IPO soon. Alibaba Group actually holds the most blockchain patents in the world, around 10% of those, according to one of the patent watchdog companies. And so they've already got a tremendous stake in this space. And this Ant Blockchain Open Alliance that they've created, it was in beta since around November, but now it's ready to launch. What they're really hoping to do is to help small companies develop blockchain solutions or applications at a more affordable cost. According to Ant, this is actually capable of, the platform can run around 1 billion daily transactions with around 100,000 cross-chain processes per second. So, it's this transaction per second limit appears to be pretty high with what they're wanting to run. We'll see once people in the West get a hold of this, once it's out there, and to see exactly how capable it is. But I would expect that when Alibaba and Tencent throw engineers at AI or blockchain or other things, they tend to do a pretty good job. So I'm expecting this is going to be a pretty interesting platform. We'll see where that kind of goes. But they're really saying that for them in the future, they believe blockchain will be the infrastructure of the digital economy. So they're making a pretty heavy bet into this space. And the word open is in there, but that's to be taken with a grain of salt. They've actually been very clear that not everybody will be able to run a node, that there will need to be a validation process there. And like anything that's dealing with finance in China, this has to go through kind of an approved system. But I think it's pretty interesting to see this large of a project coming out of them. And I think most likely will have significant effects outside of China and not just through Ant's existing financial services.
Mm-hmm. I mean, there's been a lot of talk of that, of kind of China being at the forefront of blockchain. They say a lot of accusing the USA and USA regulators of kind of strangling innovation on that end in the US. Is it possible that the Ant Blockchain Open Alliance, is there a possibility that this would actually be kind of joined and by outside of China? Will European companies actually join this? Is there a threat that this could go international?
Well, I mean, this, we have the same discussion around the central bank digital currency of China once that launches. Obviously, China would love for any of these tools to become global. So I think the digital economy and the crypto assets idea is definitely in the long-term ideas for China, an opportunity for China to be a global financial player in the sense of, kind of dethroning the dollar or the euro and taking its place there. Afterwards, it's going to be, how open really is this? And is this going to be a choice of companies that are outside of China that want to use it because it's exactly the solution that they're looking for, and the openness of it in the sense of the ability to be a part of it and not be under strict Chinese control is something that they're still interested in? Or is it something that they'll kind of be forced to use if they want to bridge with the Chinese economy as that economy becomes more open to the world? So I think we'll kind of have to see exactly how this gets accessed. We know with the central bank digital currency that it's not a true blockchain, and that in the sense that it's or it's not a true crypto in the sense that it's not going to be decentralized in the sense that the actors that are a part of it could be unknown, or could kind of be anybody. Be decentralized in the sense that there are going to be lots of nodes and that lots of actors are a part of it. But the reality is all of those will be known actors and will be controlled. So whether or not that is something that will interest businesses in Europe and the US, we'll have to wait and see. But obviously, I think long term, this is China's interest, is to become a global player in the digital economy.
Mm-hmm. Well, we started off with Europe, we swung over to China. Now coming back to the Middle East, the Qatar Financial Center has banned crypto businesses. How big of a deal is this?
So this is basically their economic kind of innovation zone that they set up. The financial, Qatar Financial Center, the QFC is, I think, around $20 billion of assets under management in this specific zone that they have created to kind of encourage outside innovation and investment, startups to come in, other companies to develop things inside of their economy. I think we've seen this in a lot of places. We've seen it also in Bahrain. We see it in there's if we look at Singapore, the fact that it has a very accessible monetary authority, and that they're very open to working with things, has really stimulated the economy. So a lot of the smaller countries have created these zones to encourage outside investment and economic development. I think that this is, for any company that was looking to leverage that or create value in that was in the crypto space, this is an extremely big deal. We don't have statistics to break down exactly how much of the around 500 companies that are in the QFC could potentially be a part of this, or how this will affect their reputation for companies wanting to come in and start. But for now, basically any digital asset that is a substitute for fiat currency, any kind of digital value that can be traded or exchanged or used as payments, is not legal. This was actually sent out in a tweet, and they sent the screenshots of the image of the document that kind of outlines some of this in that, and they've since developed on that a little bit. But basically, yeah, that shuts this down. So I think this is, this will have a chilling effect on that specific economy, in terms of the way the QFC was meant to be kind of a bridge to the outside and help develop the economy through innovation. We'll see how that benefits others in the region. For example, we look at Bahrain, we look at Dubai. Will this be something that encourages companies that are looking to establish in the region to kind of look to a neighbor and go there instead? I think this is probably, it's pretty clear. At this point, there's no vagueness here. It's just a blanket ban. So it doesn't look like, apart from the little piece that says, unless of course it's a government digital currency or solution. So maybe there's more to that they have not released yet that they want to talk about. Yeah, I think this will limit anything around the digital economy that was looking to benefit from the other reasons that Qatar is an interesting place for innovation. So we'll see.
Mm-hmm. Well, swinging over to an American-based company, IBM, and their food trust blockchain has been applied to olive oil. Now, I mean, this is just the latest food to be on that food trust. Has IBM and its food trust, has it proven to be kind of carved itself out as the go-to for this supply chain, especially for foods?
Yeah, well, it seems like about every week, one of the stories in my list of possible stories is a food trust story. So this is definitely scaling well. Olive oil is one of the highest fraud kind of related food products out there. I think the statistic was around half of all virgin olive oil. If I see it in my notes, around half of all virgin olive oil has trust issues around its labeling, in terms of, it might not just be the flavor, but it could also just be in terms of the whether it's organic, where it was produced, all the different issues that could relate to the potential health benefits of that olive oil. So the olive oil industry is very aggressively looking to fix that kind of the reputation that might go around certain, around their space in olive oil. So according to this company, they already had developed quite a few solutions to really improve their traceability of their olive oil. But this is a way for them to create more of a visible transparency and trust by working with something like the Food Trust Network. Mm-hmm. So yeah, this is just for IBM, Food Trust and TradeLens continue to scale significantly well with corporate partners coming along. And I think it's really exciting when people start asking, well, what does the blockchain really do? What are real solutions? I think we've got a lot in the food space and in trade to reference now.
I know for me, when I take off my BLOCKTV suit jacket, I'm home as just a regular guy. I know that the IBM Food Trust is actually the most visible application of blockchain, excluding cryptocurrencies. When like you said, when you do ask what does the blockchain do, I do think that the Food Trust, at least as the consumer-facing product, it does happen to be the best use case so far. Well, Ethan, thank you so much for taking us around the world. Boy, was that a blast. And we look forward to you next time. And for all our viewers at home, wherever you are in the world, make sure to check us out at blocktv.com for more on blockchain and cryptocurrency news.
For more news and updates, follow us on Twitter.